Leonardo Da Costa. I'm a portfolio manager at First Trust Global Portfolios. I'm here today to talk about our first actively managed ETF that we've launched in Europe. It's our First Trust Factor FX strategy. The strategy is a systematic strategy investing across currency markets, across developed and emerging market currencies, giving you exposure to the carry trade in a risk-controlled manner. ETFs have traditionally been seen as synonymous with passive strategies. The way we look at ETFs are they're essentially a wrapper for either passive, smart beta or active strategies. If you break them down, they're essentially mutual funds that are traded on exchange. And so a number of our strategies at First Trust are smart beta. The strategy we spoke about today is an actively managed strategy, and it simply means it's traded on exchange. Intraday is fully transparent. So what we found is investors are initially very concerned when you start talking about currencies. They view them as a very risky, not even an asset class. And what we're trying to frame to investors are that currencies can be looked at as an asset class, an extremely liquid one at that. And so a lot of the questions were focused on how we get our exposures and how we manage those exposures. Because typically currencies are a byproduct of a strategy, it's something you decide to hedge out rather than something you're actually trying to get exposure to or investing in. Cryptocurrencies are much like, I guess they become very popular of late because they've been in the media. When we look at currencies and more specifically at the carry trade, we're looking for that carry. And I guess the issue with Bitcoin, or let's even say something like gold, there isn't a positive carry that you can earn by investing in Bitcoin. Bitcoin seems to have taken that wealth preservation element of money. Money has a number of functions. And so as an investment, it's more of a store of wealth rather than an investment opportunity that you can earn a carry on. It's always good to get in front of clients and engage them with questions. What we've seen is that there are a lot of preconceived notions, especially when it comes to currencies and currency markets. And so part of the presentations we usually give is to show that currencies aren't necessarily more volatile than other asset classes like equities, like individual equities, like equity indices. And indeed that you can look at them as an investable asset class. And so typically investors wouldn't focus on this, and it's very important to get in front of them to provide them with these solutions that they could augment their portfolios with.